Hi guys, in this video I'll be explaining fair value gap and how you can understand fair value gap in a short period of time. Fair value gap is a gap which is missing in a trade. How does this work? So imagine there is a trader who comes into the market to create a gap. But how do you understand that this is a gap? Is that we have three consecutive candles, the candle 1, candle 2 and candle 3. So the first candle creates a gap in candle 2 which extends to the candle 3. All right, so the missing point in the candle is actually the gap. So the smart traders use this candle or use this zone to have a retest or to have a reaction in the future prices. So most of the traders use this zone as a perfect entry, maybe in the bullish side or in the bearish side for a buy or for a sell. So when you see a fair value gap, let me tell you that it's always, or let me say almost all the time, have a retest in the candle. Bullish and the bearish fair value gap. In the bullish fair value gap, you can see we have three candles, which is the candle 1, candle 2, and candle 3. The candle 1 created a gap for the candle 3. Okay, so the candle 2 is where the gap is situated. All right, and the gap shows where price move very quickly. The price move very quickly at this point because there is no wick. Sometimes you can see a wick, sometimes you may not see a wick, but there's no wick in between. All right, so this means that the buyers were so aggressive and the market didn't trade fairly in that zone. So what usually happens is that price may come back to fill this gap, all right, then bounce back up because this particular area is actually going to be our demand zone. All right, most especially we always want to buy from demand zone and sell from the supply zone. Okay, buy from the demand zone and sell from supply zone. Why we're doing that? Because we want to buy when it's very cheap and sell when it's very expensive. All right, there's a video on my supply and demand zone. You can check my videos, okay, before you understand what supply zone and demand zone means. So it's always a buying opportunity when the price returns to this gap because you always want to see the move to go this point, okay, to the bullish. All right, so we always want to see the price to react into this gap and move to the top side. All right, the price will always continue to react into this zone because it's a fair value gap and the price is very cheap at the zone because this is a demand zone. All right, but for a supply zone, what do you want to see? The supply zone is where you're going to notice the bearish fair value gap. And what is the bearish fair value gap? We have three candles: candle 1, candle 2, and candle 3. Candle 1, candle 2, and candle 3 created this gap. You can see the end of this gap here, the end of this candle here, and the end of this candle here. Created the fair value gap. All right, so you can see the fair value gap. So it is a bearish trend. All right, because at this point we are at the bearish zone or we are at the supply zone. Okay, why are we at the supply zone? Because the price is very expensive at this point and the trend is trending down. All right, so we might want to see a reaction of the price to come back into this and fill this fair value gap. Okay, fill the fair value gap and boom, into the zone. Sorry, I made a mistake here. It's meant to be here. Okay, so I want to see the trend fill into the zone. After filling into this zone, I'm going to sell. Okay, the sell might be immediate or it could actually create series of support and resistance, maybe consolidation before going downwards. But I know that it's the downtrend. That's why I'm focusing on the downtrend. All right, so the bullish fair value gap signals the market bias of uptrend. The price action is the price shoots too fast, and the trading zone is going to be at the demand zone because we are buying at a very cheap price. Whereby the fair value gap, which is a bearish fair value gap, signal a downtrend market bias, and the price drops quickly. Okay, and it's always located at the supply zone. All right, and the action is that we sell because the market always retests at the zone and sell. All right, So looking at the structural example that I've shown, you can see that the fair value gap is always an imbalance and the price always retests the zone. So what do we want to do? We always want to buy from the bullish fair value gap and sell from the bearish fair value gap, because we are buying when the price is very cheap and we are selling when the price is very, very expensive. Let me show you a live example and see how this plays out. The screen, you can see that we're coming downtrend and suddenly we push to the top. Most times, if you're unable to signal the trend, if it is uptrend or downtrend, I tell my students to always half their screen into two. So when you half your screen into two, you can tell that, okay, are we going downtrend or we're going uptrend from the zone? All right. So we can see that there are a series of breaks at this point: lower low, lower high, lower low, lower high, lower low, lower high, lower low. And from here we have a change of character, a big one going to the upside, creating higher high, higher low, higher high, higher low, higher high, higher low. Just in case you don't know how to draw the chart trend or the trend of the charts, you can easily just make sure that you take it gradually by looking at the most recent reversal at the top or at the downside. So at the end, you can actually get it just along the line. Okay, now we've signaled out the most recent breaks, right? And you can see that we have a lot of long pushes candle to the downside and a lot of pushes candles to the upside. Okay, from this zone here, from this area here, this is a fair value gap. It was a fair value gap in the past, but it's no longer a fair value gap again because it has been tested. How is it tested? Is that I can see that in my candle 1, candle 2, and candle 3. So between the candle 1 and candle 3, there was a gap at this point, right? There was a gap at this point, and yep. So this is a gap. My candle 1, candle 3 created this gap in between. All right. I told you that if you have a bearish fair value gap, that means the trend is coming down. You definitely must have a retest in this zone. Okay, when you have the retest in the zone and the trend is coming down, you will always want to sell from the zone. So that's why you might want to put your sell position at this point and create a stop loss somewhere here or stop loss somewhere here and target the down trend. And you can have like 3.8, 3.5 thereabouts, depending on your risk reward ratio. All right, that is the first example we want to show in the downtrend. Another example I want to show in the downtrend is that you can see the first candle, the second candle, and the third candle. Okay, there's a gap between this pin here and the wick right here. We can call it pin, we can call it wick. So if you draw it very, very well and you extend it to the end of the chart, you can see that there's a retest in that zone. You can see there's a retest in that zone and pushing to the downside. So from this point here, you can actually sell from here, take your stop loss to be at this most recent lower high and extend it down to where the trend ends, or extend it down to where risk reward ratio can adapt, maybe 3.8, 3.5 or 2.5 or thereabouts. Okay, that's the second example. Another example you can see is that from this zone, we can see the first candle, the second candle, and the third candle. There's a gap between the first candle and the third candle, creating a gap in the long push to the downside. All right, if you're using the order block, you can see this is an order block zone. You can imagine how long this push is to the downside because it's creating a fair value gap, which is an imbalance that we'll be talking about. Okay, taking it down like this, you can see because the trend is still continuing coming down, and we cannot buy because the trend is still downward. That is why we always want to sell. So it's entered inside the zone and sell to the downside. From this zone, you can actually sell from the half of the fair value gap or sell from the beginning of the fair value gap, just in case. Most traders are telling you to sell from the half of the fair value gap because you just want to be careful and be sure that your stop loss is always at the most recent lower high. And you're targeting the downside of the trend, maybe 2.2, 2.4, 2.5, 2.8, thereabouts. Okay, so another example is the bearish one, which is this very long one. We have 1 year, we have another 1 year, we have another 1 year. the trend change at this point. So this zone, this area is the change of trend. Okay, that's the change of trend, and we want to see if the price will continue to respect the fair value gaps that we're seeing at the bullish side. All right, you can see from my example, the fair value gap, we're going to the top, respect it like that. Going to the down, respect it to the downside. So we always want to buy from where the price is very cheap. Okay, this is the fair value gap. You can see there's a space here, there's a space here between this candle 1, candle 2, and candle 3. So I can mark my fair value gap very little, very little. All right, I want to buy because it's very little. So I can buy from half of the fair value gap, extend my stop loss to the most recent lower high, the previous lower high, or extend it to the most recent lower high at this point, and I'll be targeting the end of the trend, maybe the half of the end of the trend or somewhere here. And you can see how it works. Okay, another example is this particular candle 1 and candle 2. This is a doji candle, like indecision candle, which tells you if you're going up or not, and you cannot really say. And you can see there's a gap between these candles, extending it to the right side of the chart. You can see that we have a push into it and a reversal to the uptrend. So from this trend, I can actually buy from the half of the candle. I can actually buy from the half of the candle and extend to the most recent lower high, or the most recent, or maybe another lower high at the top, and I'll be looking at 2.4, 2.5, 3.0, thereabouts. Okay, that's how to trade with the fair value gap. The fair value gap is one of the most important concepts in smart money trading. So you need to be very careful when you see the fair value gap, because there's always a retest. So it's a price imbalance on the chart where the market moves too quickly, skipping normal trade levels, because the price often returns to that level. Thank you so much for your time, and see you another time.